Good morning, welcome to Morning Outlook. This is Kim speaking on Tuesday the 25th of November. So what we got in store today, firstly let's just have a quick flick of the news services. We'll go on to look at Forex Factory first, and as you can see we've got the inflation report basically coming out there, PPI data coming out and retail sales coming out at 1:30. Now this is all old data, this is September figures, so September October figures then. Quite old numbers. We'll see how they affect the markets, but one thing's for sure, I mentioned it yesterday, but the percentage Fed rates, well, I was looking yesterday at 70%, it's now 80% chance for a cut in December according to this. I've seen other figures quoted of 90%, so it's that's the picture at the moment. Apart from the PPI then, we do have low-key data which I wouldn't even worry about because it's unlikely to create too much movement over too much movement at all there. Okay, so we're left to technicals again. So we'll start off with the euro dollar, and we're sort of seeming to get into this consolidation phase where we are at the moment. See on the shorter time frame here, the last few days, excuse me, quite range bound. Now yesterday when I was talking, it was looking like it was going to roll over. The 8 o'clock bar came in, it was looking like it was going to roll over, and as I said, don't ever jump on board too quickly on these, and it completely reversed, went up, hit the R1, and that was pretty much it for the day. It rolled back obviously, and it's now sort of sitting in no man's land as we're looking at the moment. There is a potential for a continuation to the upside here. We put the higher lows in yesterday overall, so but we could just as easy just get up a few points and run into this resistance level. So not looking shiny on the euro at the moment. The pound holding well, bearing in mind we've got the budget meeting this week. It seems like all the bad news is probably being thrown out early. All the potential options have been just thrown out to see how the market's reactions to them. Well, we'll see what happens here, but it's really quite ugly yesterday. It's just, to me, I don't want to be trading in markets like this, so I'll step clear of the pound for now at least. The dollar yen, now we had been seeing some reasonable upside on that, but as I said for a while now, there's the scope for this to pull back and slow up. We're not too far away. In fact, we've hit the bodies of those prior highs there, and it seems to be having a reaction into last week. And well, this week at the moment it looks like we're possibly changing course here, but it's still, for me, I'd be waiting for a break of the lows that were there on Friday to be more confident about a correction here. Yesterday, well, it barely moved anywhere, and whilst we're waiting for US data to catch up and there's no other data, we're a bit lost with some of these things. Australian dollar, well, you can see the short term again, it's very similar to the euro, and its overall view there, consolidation where we are at the moment on the 4 hourlies. Short term, well, I don't want to be trying to trade these again. Yesterday that was a bit later, it came off at 9 o'clock, never continued through, so that came off my list quite quickly. US dollar CAD, now this on a daily basis has been chipping up there, but even this is consolidated. When you come down to the lower time frames, you can see it's quite choppy and not really moving too well at all here at this stage. Yesterday, slight drift up there, that was near enough all done by 9 o'clock there, and then it just, I mean, if you'd taken trades into this, you would have been sitting there holding it, maybe up fractionally at the moment, but it's just risk, sitting in risk, which is not good risk in terms of price action at the moment. New Zealand dollar, I mean, it's been tracking down for ages. New Zealand dollar, we're expecting a rate cut this week. It's all priced in, I would imagine. Bearing in mind it's been expected for a while. But again, looking at it yesterday, these aren't markets I want to be trading in, so I just have to sit aside of these. It's just no point trying to get into trades that aren't there really. So I start drifting across to look at other markets, looking at gold as ever, look at a couple of commodities here, gold and silver. Well, gold yesterday did manage its push up there, but it did it and then sort of stalled. It did get a little movement, a bit of movement there. 6 o'clock, 6 o'clock yesterday. Started moving a little bit more positively. Low interest rates is normally benefits gold, but it's not the prettiest looking pattern sitting there at the moment, although it's errs towards the upside, but no trades for me there at this stage. Oil, I keep on saying I haven't really traded this too much at all lately, or hardly anything at all for months now it seems. The drift is certainly to the downside here overall. We did catch a bit of a bounce there, or movement there late yesterday, beg your pardon. Sort of came in. I prefer, if I'm trading this, I prefer to trade it around 2-3 o'clock, around that sort of area, mid-afternoon. Looking at this at the moment, well, if this is bottoming out, we could be catching a bounce here, but we'll see how things shape. It's about the cleanest it's been for a while. So often at this time of the morning though, it looks like it's ready to go for a bounce, and then it pips up a few pips, you get the pop and drop sort of pattern in there, so you've just got to be a bit careful on that. Maybe he's tidying up, saying that yesterday was hardly tidy, was it? It just come in, got the bottoms and run off again. Equity markets, let's look at the S&Ps. So if you're finding it difficult to find things, well, on Forex and the indexes themselves, I'm not surprised. So yesterday we saw the move up there, as we're seeing greater potential interest rate cuts. It's come off quite nicely off the quarterly pivot overall, higher lows coming through. It's still in this downward channel that's sort of sitting there. I haven't drawn it on, but you can spot the channel that's running down there. It's still sitting in that at this stage, creeping its way up there. It's highs consolidating around the highs. There's scope for a continuation of this at some point. My preference is to trade it in the afternoons because that's when the cash market's open. There's no reason to be trading it beforehand. The FTSE, saw some movement in this yesterday, but it was quite ranged. I say saw some movement. We saw it in the morning. It was quite short-lived, look. It managed to get back to its pivot. It was looking at earlier on like it had some scope to break out here and push up there. Never happened. Came back to the pivot instead, failed. Not looking particularly pretty where it sits now either, which brings me to the unpretty market of the DAX. So the equity market's not really pointing a great deal out here either. DAX still, to me, the most bearish of the equity markets, but it will be potentially drawn up by US shifts. But you see it yesterday, really not doing a great deal. We'll see how it reacts to its daily pivot at the moment, but it too is in a mess. So in summary, guys, there's a pretty much flat markets. There's not a great deal that I'm looking at this, and whether you're looking at dailies, 4 hourlies, or whatever, to be trading into at the moment. It's just the way it's been over the last few months. It's not even something new here. It's regularly occurring. It's rarer now for us to get 2 or 3 potential trades in the morning, but that's the way things are running. We're getting slightly better moves in the afternoons. So my advice would be to sit on your hands, let them go numb, then get off them in the afternoon. See if there's anything kicking. But when we're looking at things like this, it's just not much fun, is it? Right, okay, I shall leave you there, and I will catch you in the morning. Take care, bye for now.